Ready to secure your financial future this year? Look no further. In this video, we'll reveal the top 3 safe investment options with high returns. Say goodbye to low-interest savings accounts and hello to smart investments that deliver exceptional returns without sacrificing safety. Whether you're a seasoned investor or just starting out, these investment options will provide you with peace of mind and maximum growth potential. So sit back, relax, and join us as we explore the best ways to grow your wealth this year and beyond. Don't miss out on this opportunity to secure your financial future. Hit that subscribe button now. It's time to get some manure for growth. The top 3 safe investment options I recommend for high returns in 2023 and beyond are bonds, index funds, and real estate investment trusts, REITs. These are especially great ways for beginner investors to begin investing as they are simple, low-cost, and low-risk forms of investments. Let's take a deeper dive into each of these investment options. Bonds. A bond is a debt security that represents a loan made to an organization such as a corporation or government. The bond issuer agrees to repay the loan with interest at a specified date in the future. When you buy a bond, you are essentially lending money to the bond issuer. The bond issuer then uses the funds to finance its operations, projects, or expenses. In exchange, you receive regular interest payments until the bond reaches maturity, at which point the bond issuer repays the face value of the bond. There are several types of bonds, including government bonds, municipal bonds, and corporate bonds. The type of bond you invest in will depend on your investment goals and risk tolerance. As a beginner, if you want to invest in bonds, it is advisable to buy bond funds instead of individual bonds. Bond funds are cheaper and help in diversifying a bond portfolio, as it involves buying small pieces of several bonds from many issuers in a single transaction. Individual bonds, on the other hand, are more pricey and don't allow for bond portfolio diversification. How can you buy your first bonds? You'll start by opening a brokerage account with a financial institution or online broker. You'll decide the type of bonds you want to invest in considering your investment goals. You'll need to educate yourself. Read up on bonds and understand the various types, risks, and factors that can impact their performance. Then you choose a bond. You'll select a bond that fits your investment goals and risk tolerance, and you place an order from your brokerage account. The second of the top 3 safe investment with high returns is index funds. Index funds are a type of mutual fund that tracks a stock market index. They offer low fees, low volatility, and diversification, making them a good choice for conservative investors. These are a type of investment fund or portfolio of securities that track a specific market index, such as the S&P 500, NASDAQ 100, or the Dow Jones Industrial Average. The idea behind index funds is to provide a simple and low-cost way to invest in a diversified portfolio that mirrors the performance of a market or sector. Index funds are passively managed, meaning they are designed to follow the performance of the underlying index and are not actively managed by a portfolio manager. This means that index funds typically have lower management fees compared to actively managed funds, as there's less work involved. The benefits of investing in index funds include wide diversification, lower costs, and the potential for long-term growth. Overall, index funds are a great option for investors who are looking for a simple, low-cost, and diversified investment strategy. They can be a core holding in a well-rounded investment portfolio and can be purchased through a brokerage account. How can a beginner investor get started with investing in index funds? Investing in index funds is easy. First, you need to have a goal for your index funds. Before you start investing in index funds, it's important to know what you want your money to do for you. If you're looking to let your money grow slowly over time, particularly if you're saving for retirement, index funds may be a great investment for your portfolio. Secondly, you'll need to research index funds. Once you know what index you want to track, it's time to look at the actual index funds you'll be investing in. When you're investigating an index fund, it's important to consider several factors such as Company size and capitalization. Is the index fund tracking small, medium-sized, or large companies? Geography. Are the funds focused on stocks that trade on foreign exchanges or a combination of international exchanges? Business sector or industry? Are the funds focused on consumer goods, technology, or health-related businesses? Asset type. Are the funds tracking domestic and foreign bonds, commodities, or cash? Consider factors such as expense ratios, fund size, and past performance. After you've done your research and decided on the index funds to invest in, you'll have to open a brokerage account. Choose a reputable brokerage firm that offers index funds that fits your needs. There are several reputable financial institutions and online brokers you can choose from. When you've opened a brokerage account, you'll need to fund it. You can transfer money from your bank account to your brokerage account to begin investing. Then you place an order. Decide how much money you want to invest in the index fund and place a buy order through your brokerage account. The third top safe investment for high returns this year and beyond is real estate investment trusts. REITs. Traditionally, investing in real estate involves large capital. But REITs have changed the game for investors who want to diversify their investment portfolio with real estate, but do not have the huge funds to buy whole real estate. REITs are a type of investment vehicle that invests in income-generating real estate properties such as apartments, hotels, office buildings, shopping centers, etc. It allows individual investors to pool their money to purchase, manage, and own properties, thereby providing access to professionally managed real estate investments. REITs pay out the majority of their earnings to shareholders in the form of dividends. Investing in REITs can provide a steady stream of income and have the potential for capital appreciation. We recently did a video dedicated to real estate investing. In this video, we dived deeper into REITs. I'll recommend you go watch it when you're done with this to get more details. When you invest, you must monitor your investments. Regularly review your portfolio and make adjustments as necessary to ensure it aligns with your investment goals. It is recommended that you don't cash in on your investment prematurely. Learn to leave your investment to mature well. There you have it, the top 3 safe investments for high returns in 2023 and beyond. No single video can give you all the information you need regarding these investment options. You'll have to research and dig deeper to make an informed decision as to what, how, and where to invest. Now is the right time to start investing for the long run, so start with what you have. If you have questions, leave them in the comments below. We'll be happy to help out any way we can. If you got any value from this video, let us know by giving it a thumbs up and subscribe to this channel for more of such value-packed videos. Remember to click the notification bell so you'll be notified anytime we upload a video. Thanks for watching.